crash is here. For many people, it's going to be the worst thing that's ever happened to them. I don't care if you're in stocks, bonds, mutual funds, real estate, gold, or silver, or Bitcoin. This crash will bring everything down. Now, the good news is that's when you get rich.
Brace yourselves for a game-changing revelation. While the crash may seem like it's bringing everything down, it's actually your golden ticket to wealth. That's right, folks. In this exclusive video, we're plunging into the realm of investment strategies alongside the legendary financial guru, Robert Kiyosaki. Get set to unlock the secrets to thriving amidst economic upheaval. In these uncertain times, mastering the art of safeguarding and growing your wealth is paramount. With Kiyosaki's expert insights, we'll unveil actionable strategies tailored to empower you to seize control of your financial destiny. Whether you're a seasoned investor or just dipping your toes in, this video is a treasure trove of invaluable knowledge to help you navigate the storm and emerge stronger than ever. So, fasten your seatbelts and embark on a journey toward financial freedom. The wisdom imparted here holds the key to transforming your financial future. Without further ado, let's dive headfirst into the realm of savvy investing with Robert Kiyosaki. The new economy and the longest bull run. In today's rapidly evolving economic landscape, characterized by unprecedented technological advancements and shifting market dynamics, Robert Kiyosaki offers invaluable insights into going through the complexities of the modern financial world. As we emerge from the longest bull run in history, spanning an impressive 11 years since its beginning in 2011, Robert reflects on his own journey and the lessons learned during previous market crashes. In 2011, amidst the turmoil of MBS and CDL crashes, Robert seized the opportunity to amass his largest fortunes by strategically investing in real estate across the Southwest. This experience not only solidified his understanding of market cycles, but also underscored the importance of remaining vigilant in the face of market uncertainties. Despite the optimism surrounding the current bull market, Robert remains cautious, challenging the extensive belief that this time it's different. He observes the growing sentiment among younger investors, driven by technological innovations like cryptocurrencies such as Bitcoin and Ethereum, who believe in the infallibility of the current market conditions. However, Robert's seasoned perspective reminds us of the cyclical nature of markets and the potential pitfalls of complacency. By sharing his own experiences and insights, Robert encourages investors to adopt a critical mindset and carefully evaluate the risks and opportunities presented by the ever-changing economic landscape. By heeding Kiyosaki's advice and remaining vigilant in the face of market fluctuations, investors can position themselves for long-term success and capitalize on opportunities presented by market downturns. Skepticism towards traditional investment advice. In his candid and thought-provoking analysis of the current financial landscape, Robert challenges the common knowledge surrounding the Federal Reserve's role in shaping economic policy. With a critical eye, Robert questions the prevailing notion that investors should blindly follow the Federal Reserve's directives, or FED, particularly in times of economic uncertainty. He highlights the limitations of monetary policy, pointing out that while the FED can influence interest rates and money supply, it cannot address fundamental economic issues such as the production of essential commodities like oil, gas, and food. By daring to question the saying, "Don't fight the FED," Kiyosaki encourages investors to think independently and critically assess the broader economic forces at play. Robert further critiques the leadership of the FED, likening them to the Three Stooges, comprised of Janet Yellen, Biden, and Powell. Drawing parallels to the past, he reflects on the era of former FED chairman Paul Volcker, who implemented drastic measures to combat inflation. However, Robert questions whether current FED policies, particularly under Powell's leadership, can achieve similar outcomes in today's vastly different economic landscape. With a blend of skepticism and pragmatism, Robert urges investors to remain cautious and not rely solely on the promises of central bankers to safeguard their financial future. Moreover, Robert sheds light on alternative investment strategies that diverge from the traditional advice propagated by Wall Street and mainstream financial institutions. Contrary to the common narrative of investing in stocks, bonds, mutual funds, and ETFs for long-term wealth accumulation, Robert advocates for a more diversified approach. He shares his personal stance of avoiding paper assets altogether, opting instead for tangible investments such as real estate and other income-producing assets. By challenging the status quo and offering alternative perspectives on investment, Robert empowers investors to explore uncommon paths to financial success and independence. Critique of conventional wisdom. Reflecting on his experiences as a Marine helicopter pilot during the Vietnam War, Robert offers a sobering perspective on the financial landscape of the 1970s. Returning from service in 1974, Robert witnessed the passage of legislation such as ERISA, which introduced retirement savings vehicles like the 401k and IRA. However, rather than viewing these developments as positive steps towards financial empowerment, Robert expresses concern over the lack of financial literacy among his generation, the baby boomers. He observes the trend of individuals transitioning from unrelated professions, such as school teachers becoming financial planners without adequate understanding of financial principles. This juxtaposition of newfound financial tools with a lack of financial education underscores the dangers of uninformed investing and the potential consequences for future generations. Furthermore, Robert highlights the irony of baby boomers pinning their hopes on the stock market to sustain their retirement savings, even as Social Security faces challenges. He attributes this blind faith in conventional wisdom to societal conditioning, where individuals are taught to defer to authority and adhere to traditional investment strategies advocated by institutions like the FED. Drawing parallels between past and present economic conditions, Robert questions the wisdom of blindly following the guidance of central bankers like Powell, especially in the face of escalating debt levels. Through his candid reflections, Robert urges investors to challenge common knowledge, educate themselves about financial matters, and adopt a critical mindset to go through the complexities of the modern financial world. Leveraging debt and investing in tangible assets. Robert Kiyosaki recounts his astute investment strategy of leveraging dropping interest rates to acquire and improve apartment houses, amassing a staggering portfolio of 13,000 units. With each decrease in interest rates orchestrated by the FED, the value of his property soared, allowing him to enhance their worth further through refinancing. Remarkably, Robert now finds himself debt-free across his extensive portfolio, with each unit generating substantial cash flow amid the buoyant market. Despite his success, Robert remains critical of the monetary policies implemented post-2011, attributing the subsequent economic turmoil to the reckless printing of money to prop up a faltering economy. As he reflects on this journey, Robert underscores the importance of strategic investing and maintaining a vigilant stance amidst volatile economic conditions. Robert Kiyosaki reveals his unconventional approach to leveraging debt as a means of generating tax-free income and building wealth. With a portfolio comprising 13,000 apartment units, Robert strategically utilizes debt to finance property acquisitions and renovations. By refinancing his properties as interest rates decrease, he maximizes his cash flow while minimizing tax liabilities. Unlike our normal thought about debt, Robert views debt as a valuable tool for wealth creation, allowing him to capitalize on tax breaks such as appreciation, depreciation, and amortization to offset taxable income. Furthermore, Robert eschews the practice of flipping houses, recognizing the tax consequences associated with short-term gains. Instead, he opts for a long-term investment strategy, leveraging debt to acquire and hold income-producing assets. By harnessing the power of tax-free money generated through property investments, Robert not only mitigates tax burdens, but also capitalizes on favorable market conditions, such as the surge in oil prices following policy changes. Through his astute financial maneuvers, Robert demonstrates the efficacy of strategic debt management in achieving long-term financial success. Critique of government policies and investment strategy. Robert Kiyosaki expresses deep concerns regarding the economic policies and their potential ramifications under the Biden administration. Checking it from Robert's extensive experience in the oil industry, he warns of the adverse effects of policy that could lead to bankruptcy, particularly for the middle and lower classes. With a critical eye on inflationary measures, Robert highlights the vulnerability of these socioeconomic groups and the looming threat of America's financial stability being compromised. In response to perceived economic uncertainties, Robert adopts a proactive stance by leveraging his investments in oil wells. Despite the prevailing skepticism towards oil investments, Robert's approach as a wildcatter underscores his confidence in the tangible value of resources beneath the ground. He cautions against blind adherence to conventional financial advice, advocating instead for a discerning approach to investing. As he goes through the volatile financial landscape, Robert emphasizes the importance of remaining vigilant and critically evaluating the sources of financial information to safeguard against potential pitfalls in the market. Conclusion. In conclusion, Robert Kiyosaki's insights offer valuable guidance for going through the complexities of the financial markets and potentially capitalizing on the next market crash. By leveraging strategic debt management, investing in tangible assets, and adopting a critical mindset towards conventional wisdom, viewers can position themselves for success in uncertain economic times. Kiyosaki's alternative investment strategies challenge viewers to reassess their approach to investing and consider innovative avenues for wealth creation. Remember to subscribe to our channel for more insightful content, like this video, and share your thoughts in the comments below.